All right. Good morning, traders. Happy Wednesday. Welcome to the middle of the week. Welcome to the Tradespoon live trading room, stocks and options opening bell. My name is Scott, and I will continue to be your host this week in the mornings, filling in for Vlad. We'll still also meet this afternoon. Good to see everybody as we continue trying to get our finger on the pulse. Is that a oh, no. Bill says, is that a Tradespoon employee that says the webinar will begin shortly? That is go-to webinar saying that. It says it to me too. Tells me that you can't hear me till I unmute my microphone. All those good webinar systems. That's automated. Good morning, Fred. Good to see you. Hey, Bob. Glad to have you. Thought it was Stella. Stella's helping out. She's multi-talented. Good morning, Phil. Thank you, as always, everybody else. Thanks for coming out, joining us as we enjoy some coffee. And like I said, let's get our finger on the pulse of this market. Little introduction, get our housekeeping matters out of the way. I've been trading for a while and teaching for a while. That's my intro. The disclosures, trading's risky. Have a plan. We're not advisors. This is for education. And as always, manage your risk. Okay. Let's see what's going on. Oh, now we've been talking about the increasing sense of bullishness that we are seeing, right? We're not thinking that we're feeling more bullish. We're not feeling that we think it's more bullish or thinking or feeling independently of the other. We are seeing things that say, oh, okay, this we're seeing obviously Stella giving us a sense of bullish, and we're looking at a de-escalating VIX. We believe that's a good sign. Notice what I said. We believe that's a good sign. The sign is what we saw. We saw it on the VIX. I'm not saying you can't use the words think or feel or believe. I'm saying make sure that those are a description of what you see and why you interpret it the way that you interpret it. This is going to change your trading. I promise you that. I promise you that. Futures are up 0.89 on the S&P, 0.72 on the Dow, 1% on the NASDAQ, 0.88 on the Russell. So across the board, pretty good. Oil's up 1.25. Gold, silver down just a little bit. So, okay. There's some things here that are making sense to us. Good morning, John. Good to see you. Ted says it looks like the market had some coffee this morning. Always good. Always, yeah, right. I like the connotation of coffee as a motivator. Good morning, Mario. Oh yes, John. Soon lent over with some Kahlua. Got it. Excuse me. Okay, what's going on today? This banking crisis isn't 2008. That doesn't make it a good thing. Yeah, I mean, look, it's very different. I mean, is there some concerns showing up in the banking and financial arena as interest rates have increased? Yeah, I can tell you with having had the rates as low as they were for as long as they were, and we had this conversation back when the rates were just kind of left alone. And if you remember, they raised them a couple times and then lowered them back again. Just little jittery things. We're not sure what kind of stress that's going to put on institutions. Some of them are showing what that stress could look like, but a lot of them are not, at least not yet. And as of now, the Fed has tapered off their increases and made comments that they may be done. And so if the Fed looks at it and says, "Hey, this is we're seeing this," you guys remember in cartoons when there'd be like a leak in something and the cartoon character would put their finger on it, and then another leak would pop up, and then they'd reach over and put their finger on it, and then another one, and they'd put like their toe on it, and they're trying to stop the leaks. Well, you don't know. That's the Fed, right? Put my finger here. I'm gonna put my finger here. That's what I see them trying to do. They don't know if there's going to be something else. Like that's what we've said for years and years. Is are we just kicking the can down the road? What happens when we actually get to this point where we're at now? Well, we're seeing it. So far, I'm not going to make any prognostications that that's it. We're done. Sure, a few more banks could fail. I think that the likelihood of it, as we maybe see interest rates settle into a certain level, um, diminish. So, yeah, there you go for me. Okay, market should get Mario says the market should get motivated like Cocaine Bear. I haven't watched. Has anyone seen that movie? I thought it was fake at first, like Sharknado. I'm like, that's not really a movie. They just made an ad. Then they made like Sharknado, Sharknado 2, 3. I don't know. They've probably got like 5 of those things. So I believe if the cocaine bear dies at the end, he didn't really die. Um, he's just hibernating until he gets some more cocaine. All right. What else is happening? Credit Suisse is still helping wealthy dodge taxes. That's not great. Bitcoin, we've been talking about Bitcoin and its rally, and it continues after a little pause. So there's opportunities that we've seen developing. Fed's bar sees a need for stronger regulation. I'm not really seeing anything standing out. Let me know if there's news that I have not discussed that we think um, uh, we need to evaluate. But I'm just not. I'm not seeing anything in the news that's announced. Let's take a look at the economic calendar. Nothing. Did Siskel and Ebert die? I know one of them did. I can't remember which one it was though. I don't know if the other one isn't. If they were really smart, they would have taken measures years ago to mitigate where we are now. Yeah, I agree. I'm with you. Why can't I see the economic calendar? This is not it. Here we go. Here we go. Pending home sales have dropped. I don't think that's. Oh, that's not come out yet. 10 a.m. What time is it? Almost 9:30. Yeah, yeah. That hasn't released. It's expected to drop. Yeah. Again, some weakness in the real estate market. When the real estate market increased at the rate that it did, coupled with the fact that interest or that mortgage rates have essentially doubled from the lows. Of course, how would it not, right? How would it not? There's the opening bell. Let's take a quick peek at our forecasts, and then we'll jump in and we will evaluate it. Well, I had everything loaded here. I'm not sure what's going on. Give me a second. Okay, here we go. It's not so much that the Fed is not smart, that they have to cater somewhat to politicians and oh, for sure, right? Everyone's like, oh, the Fed's not a political role. Of course it is. There's politics there. I'm not sure what's going on with my Tradespoon. Give me 1 second here. Oh, now it's loading. Okay, maybe SPY. Okay, so this is the same kind of thing we've been seeing, where it was like maybe as we failed to develop the bullish momentum that was expected, it looked like the sellers were going to maybe take a little push at it. They didn't do much. Still an expectation of a higher low. Still pushing to try to move into what we know is strength at the end of March into April. Nothing's changed here. Still looks bullish, right? Still overall. Now, is it exactly going to work the way like this? So today we're expecting almost a flat day, and then starting to bounce from there, or is today the day that starts bouncing, and that momentum comes in a little bit um, early, right? Let us quickly review our four broad markets. Evaluate if I know. Oh, see, now look at this. The range trend has turned yellow, and you can kind of see there's a little hiccup here. Overall, there's still the prospects of the bounce, but there's a little bit of hiccup developing. Even with this hiccup, though, higher low, still ultimately bullish. And if this comes early, this shifts over to here, then we might see something like this develop, right? And that's the uptrend that we're looking to see if it's going to develop. DIA, very similar, but less volatility. I mean, it's almost identical as what we've just seen from the NASDAQ, but you can see it doesn't have those large candles. So maybe expecting less volatility on the Dow. And then here's our laggard, the IWM small caps. Oh, this is the best we've seen, right? So we finally see that this is maybe, you can see like a small pullback. We've said we would really like to see small caps participate in whatever this rally is in order to give it additional breadth. That, right, when we see the market moving bullishly, when we evaluate the market's appetite for risk, the two places that I tend to go in order to see it is going to be NASDAQ, right, technology. We've seen markets lead, or we've seen markets bullish without technology. If technology is not involved, three is the number for me. Three sectors need to be really pushing and leading. Not like, barely there's a couple. I mean, three clearly leading sectors. So we've seen things like a combination of industrials, financials, and consumer discretionary, and technology wasn't really involved. Or you could replace one of those with healthcare, industrials, right? That's not what we're seeing in this market. So in this market, what we've noticed in our sector rotation is the two strongest sectors are technology and consumer, no, technology and communication services. Now all of a sudden we're seeing maybe some involvement with the small caps, with the Russell as a representation of the small caps, and we're wondering if a third component, it's not industrials yet, certainly is not financials, but we're wondering if maybe that consumer discretionary has some potential to join in, give us the breadth we need for some type of a sustainable market move. That's the objective. Find a sustainable market move. That's where we make our most amount of money as traders, is when things are consistent and sustainable. If you haven't seen it, if you haven't come as we've been chatting about it, let's take a quick peek at the seasonal charts. And again, you can kind of see gone up, it pulled back a little. Now that's that little dip here. And then what? Well, that's what we're looking for there. Is this what's coming? We talked about that we got a bullish sign, and if it was a little early, you just want to kind of stand in there. So if you had some bullish trades on, I hope you stood in and didn't get shook out in this little bit of a blip, as we're about to see. A nice 1% opening. Now we don't know if that 1% is going to hold or not. When we meet this afternoon for afternoon coffee, maybe it's 1.5%. Maybe it gives back half of its gains and it's only 1%. Maybe it gives it all back and it ends up flat. We don't know for sure. We just know that we want to make sure we evaluate it without bias, right? Don't come into the market with a bias, because then you're just going to simply look to confirm the bias you already have, right? We want to be as open as possible so that we can be water, my friends. All right, let's look at the markets, and we'll jump into some charts and see what we think about it. We'll start off with the S&P. Okay, so you can kind of see, there it is, right? Here's this kind of grind higher. We pulled back, we turned, and then it was like, we're not sure, but now it's turning. This is turning up. Yes. If this is what we finish like, even though it's slightly a red candle because it all happened overnight, it doesn't have to be a big green candle to be like, oh, now it's going up. We're seeing what we want to see. You'll notice we talked about yesterday, the day before, what kind of volume do we have? Are the sellers increasing? Well, we look down at volume. What does it tell us? No, that's very light volume. Back here, this day was concerning. We're like, oh shit, look at those sellers. And then the next day, inside day, volume is still there, but when the volume was there, part of that volume was this little run up higher, and it didn't hold. Then the next day, the buyers came. And then it paused, and you look at that volume, and you can see just how much the volume dropped off. So much good information for us to evaluate the strength of what's going on based on volume relative to average. On this day here, we are working with an average of 114 million. We got 74. So approximately 67, 68% of average. And then yesterday we said the same thing. What does the volume tell us? 62 million out of 112 million. So as you look down and you see this, whatever's happening, you're going to say, is it strong or weak? And you say, oh, that's pretty weak. That's sell off. Which is why we said, if you put bullish trades on here 3 days ago, you can't get shook out of them just because it didn't move right away. Are you wrong? No, not with those 2 days, not with that volume. I'm not wrong. So what am I going to do? I'm going to stay in any bullish trades that I put on. Now what? Well, now I'm getting a new signal that says, hey, you know what? We took a couple of trades a couple of days ago. They're still in play. They're starting to work better. If it finishes like this, we'll look at the possibility for some new trades. We'll come back in 10 minutes on this one, and we will evaluate the opening range. Let's get to the top of the watch list and just see how things are looking. Quick temperature check for those who didn't participate. Are you feeling better based on what you see? Do you feel like you have more clarity coming into your trading yet? I know that a lot of people said we're still a little bit leery, a little bit cash on the side. If you're not feeling more clarity, If you're not seeing things better, what do you want to see? What's your pitch? What are you looking for? What's going to tell you yes? What's going to tell you, hey, let's start to jump into some more positions, get some more trades in line. Something has to trigger that for us. So make sure that that thing for you is specified and very, very clear. Okay, very nice, John. Glad to hear it. Alcoa. So basic materials is not a sector that we've said is providing a lot of signals that indicate opportunity or momentum. It had a pretty nasty sell-off. Alcoa went from 55 to 39, 16 points. 16 points. That's 30%, right? Yeah, so that took a pretty nasty turn, 30% in a matter of 2 weeks. And now what? Now it seems to be stabilizing, but just that, stabilizing. No. We had a same low. What do I need to see? So my consolidation went from this. Now some people might say that's the consolidation. It broke it, and then it tested. It's the same low. I would like to see it get above this high. That's at this point, I'm looking for a double bottom. Now, a double bottom isn't a double bottom simply because it touched the same place twice. It has to break above the high point in between those two touches, right? So there is bottom number one. There is bottom number two. What does it have to do? It's gotta break the high point touched in between the double bottom. And some people trade the breakout. That's not me. If you've come to this, I don't trade breakouts. Breakouts are the setup. What's the signal then, you might ask? What triggers this thing? So it breaks out. Now I'm convinced. Then it pulls back. On the next selling cycle is where my trade will develop. So it's this out here. And you might think, oh, you're going to have to wait. Of course you do. Part of trading is hurry up and wait. Wait for your signal. Wait for your confirmation. But if we have a large watch list of stocks where this is developing while other things are already, then we should have these opportunities kind of popping in at various times. That's what I would want to see in order to get back into some bullishness here. And you'll see that there's a correlation between Alcoa and some of the other basic materials stocks. Apple. Ooh, that might be it. That might be it with Apple. This may be our consolidation. Now, whether or not you see today as breaking it, that's a judgment call. We don't have, at least as of now, confirmation from the stochastics. But I will tell you that with a stock like Apple, that can be the case. It might be a day behind, and if by the time you get the turn, it might be the next day. So you have to decide, do I take that early candle signal, the momentum of the candle turning, or do I wait for confirmation from the stochastics? Or do I pull up my partner in crime, Stella, and go to Apple, and I say, what do you think, Stella? What do you think? Stella's only got a B, so it's not her best work, but it's still pretty good work. But she says, yes, I'm very bullish. And it looks like this. Oh, interesting, though, that it could go up, kink, and then go again. Overall, though, definitely some bullishness there. Okay. Yeah, that's a judgment call. Some of you might look at that and say, yeah, Apple's a market leader. I'm going to trade it. Some of you might say, you know what? One more day. What's the risk of one more day? You confirm yourself out of the trade. If all of a sudden a big bullish wave comes and this thing gets 3-4%, 2-3%, and you're not in it, then you might hesitate and say, "Oh, now I'm too late." And that's happened to me more times than I care to remember over the past 20 years. What's the risk of getting in now? The signal may fail. Right? I definitely want to wait and see it. So this is one we'll look at the end of today, and we'll talk about like, okay, what's the judgment? What do we decide here? How about a credit put spread on Apple for 1 week? You know what? Here's the deal. I get what you're looking at, Fred, because you're like, oh, we can just put it on for a week. But I don't want to put it on for a week if I'm going to put it on and then it drops for the first 2 or 3 days and then it turns. Because if even then, if it turns, I only have 2 more days. If it's not enough time for the momentum, I could just simply be on the wrong side. So for me, it's not the length of the trade, but it's, do I have a valid entry signal? Now, if I have a valid entry signal, I can decide, do I do a week spread, 2-week spread? Do I buy an option? The implied volatility on Apple is actually quite low. The options are cheaper on Apple than they have been in quite some time. The more I see something like this, the more I think, you know what, I'm just gonna buy a call and manage it. Or maybe you look at buying a bull call spread, where you do mitigate the price to some extent, but selling the options not giving you a ton of advantage with the volatility so low here. We definitely want to keep Apple on the list for this afternoon to decide, are we convinced? Has it given us what we're looking for? Adobe looks very similar. I don't know. I might. Here's the deal. If I do Apple, I'm not going to do Adobe because they have a very similar look. So I'm not going to like, oh, well, let's put 6 new tech trades on all at the same time that all look basically the same. We're still easing into this market regardless of what we do. ADI, mostly flat. I mean, you can see this has actually a little better. It's at least pinching down here. Looks like it's trying to kind of bounce itself off the 50. Okay. I don't like this, right? This is my concern with ADI, whereas the others have strength. Archer Daniels. Okay. So this continues to potentially show us this. There's good chances it gets up there, it hits that 50, but if it comes down and it only drops into the 76, 77 range, that's enough for me. That would be enough. AMD. Ooh, AMD. Nice, consistent consolidation down, clear selling cycle. It's turning. So as of right now, it's a little above yesterday's high. Yesterday's high, 96.94. Oh, it's not quite. It's at it. Or do you wait one more day? The problem if you wait one more day is, like I said, it could be a big day. If you wait one more day, what can we do? On that day, if I do decide, and not everybody has the potential for this, and I recognize that. Some of you may not have the ability to move to an hourly chart and check on it every hour to see if it breaks a certain level and say, you know what, now I'm going to go. I don't want to wait till the end of the day at this point. I want to go ahead and move forward, right? But if you do wait for your signal, you do have the ability to um, go into a shorter time frame on the next day in order to try to catch it. Right, try to catch it and go from there. Yeah, I like AMD. Put it on the list. Put it on the list. The heat map looks Irish. It's always nice to see an Irish heat map. Amazon. Oh, now there you go. Amazon is on the menu at this point. We have our turn. We broke the consolidation. Boom. With volume. Always nice to see. Then the buyers took a break, right? And then the sellers came in. There's the selling cycle there. And now, as of now it could turn around. If all of a sudden this market, you know, hits a shitstorm in the afternoon, maybe it doesn't hold. But as of now, this is viable. This is on the menu for us to build a trade. Same thing with Amazon. We're near the lows of volatility. But if you remember, when we were looking at the lows on Apple, the empirical number was 28%, whereas the empirical number here is 40%. So the options on Amazon have a tendency to be more expensive than the options on Apple on a regular basis. Something to keep in mind if and when we build a trade on this thing. AXP, nope, right? Nope. Still just kind of in this little sideways grind. There's not enough here yet to convince us that this is one we should be taking. Boeing, nope. It's not industrials. Baba got some news about possibility of, kind of breaking apart into different pieces. The market liked it. Oh, it's nice to watch, but I'm not like, oh, I'm going to jump in this thing now. I'll just keep watching it. Raymond says, take a look at AMAT. Yeah, let's take a look at that one. Applied Materials. Oh, yeah, there you go. It doesn't have, so it's better than ADI, but not quite as good as AMD or, well, in my opinion, NVIDIA out of the chip sector. But yes, I absolutely see exactly what you're looking at, right? Trending higher, new high here. We consolidate down. How does the volume look? Diminished volume. We have a stochastics that's looking to turn. Yes, that has everything that we're looking for, without a doubt. Those are the characteristics. This is us seeing things, yeah, that give us that type of a expectation. Like it, Raymond. Well done. I like it. Okay, let's keep going. Of course, Fred, my pleasure. I appreciate you saying that. I do like knowing that we're on the right track. AMD, very similar. No, we already looked at AMD. AMD is close. Where were we? Baba, Caterpillar. Sorry. There's nothing in industrials yet. It's got more work to do. It's not like, oh, look, it's turning around. Well, that's not enough. It's got to break some levels. It's got to convince me that the buyers have regained control. It hasn't yet. Same with oil, nothing there yet. Costco's close, but that's an inside day, a harami, a bullish harami, but a harami is unconfirmed, right? The fact that it's inside of yesterday means that the buyers are better than they were yesterday, but we don't see enough of them yet. We need one more day on something like Costco, but okay, I'm open to it. Everyone knows I like Costco. I love Costco. Everybody knows that. I love their chickens. I love their hot dog and soda combo for $1.50. I like their pizza. What else do I like? I like looking for dog toys there. I mean, I like Costco and I like their stock. So. All right, DBC Energy. It's just not done enough yet. Because it got hurt so bad back here. This still isn't enough. Maybe if this pulled back to a higher low, maybe if this pulled back to 23 and then stabilized and turned, I don't think energy is going to stay like this. I don't know. Anyone a big fan of the energy sector? Do you think that energy is going to continue to show some weakness? Yeah, I mean, I'm looking for something to develop where energy comes back into favor because that's just how it's been. But we'll look and see. John Deere, not enough. Industrials is not where I'm looking to go. The Dow, looks iffy. Disney still does not look like it's done enough. FCX, Freeport McMoran. I mean, it's okay. I don't want to look for an okay house in a bad neighborhood. I want to look for a good house in a good neighborhood. That's my philosophy. FedEx, we talked about FedEx yesterday. FedEx is actually, so here you can see FedEx gave us one of the candles, but without the stochastics. Yesterday we got the pinch. Today we have the turn. So I would say FedEx is viable. It's been viable for the past couple of days. Some of you may have traded it already, but that is a valid setup. Now FedEx is interesting. I think it's technically considered industrials in transportation. Let's see how Thinkorswim evaluates it. Let's take a look at the, nope, Market Watch. Why am I forgetting where it is? Analyze, Market Watch, charts. Have they moved it? Oh, that's why. I didn't have the symbol in. I'm like, wait, what? Industrials, transportation. Okay, here we go. Sorry, just blinked out there for a second. Fred, I agree. Fred said, can't believe how cheap UNG has gotten. Not done being cheap, right? Exactly. Exactly. That's baffled me as well. I took a stab at it that one time. I'll show you when we I'll show you when we get there. Not much came of it. FXI, there's nothing there for us, but I'll continue watching it. Gold, kind of jittery up at the top. Goldman Sachs, nothing there for us. The Russell, better, but nothing yet. Jets, nothing yet. So you can see a lot of these are pretty clear. There's nothing there. Meta, I like, but no signal yet. I'm still willing to be patient on that one. Marvell. So you can see Marvell in the chip sector has had a much worse looking trend, but does seem like it's trying to pop if you happen to be a Marvell fan. Microsoft. Oh, that's a tough one. I think I like Apple. I think I like the guys up at the top better, but we'll continue to look at this. Netflix looks like it could be thinking about it as well. NVIDIA, there's another one. The candle shows momentum. The stochastics is pinching, but it's not turned yet. So you have to decide, am I willing to go when remember that the stochastics is always going to lag. The stochastics cannot turn. It's a momentum. It's a price indicator. Stochastics can't turn till price turns. Price has to go first. It's great when they both go at the same time and you're like, oh, look at that, beautiful confirmation. Here we have a turn and a pinch. Price is turned, stochastics pinched. So maybe we look for a tiebreaker. And we say, Stella, what do you think when you look at this magnificent stock known as NVIDIA? She says, I'm bullish on it overall. And I think that there is a signal showing up here. Great. What do? We put NVIDIA on the menu. It's on the menu for afternoon snack, since we're doing metaphors. Costco's close. We'll look at it this afternoon. I think it's close. I don't know that it's a trigger. It looks like it's setting up, but I don't know if it's a trigger. Oracle. Yeah, Oracle's kind of at resistance, needs to pull back a little bit. Qs you can see is trying to move around. Still Starbucks, nothing there. Silver, overextended. Semiconductors, if you like the composite ETF, that's there. SPY. Okay, it's holding up. Let's look at the opening range. It's basically in this opening range, right? Like, whoo, there's the opening range. Look how tight that is. Almost like a basing pattern for the opening range. Again, if it breaks the range to the downside, I easily see us maybe giving back half of this, 397 and a half. I don't see it closing the gap though. That's a lot. But overall, so far it's holding up, and it looks like it's going to make a run at the top side before it makes a run at the bottom side. Tesla, I said yesterday I'm close to throwing it off the island, and all of a sudden it wants to possibly give us a signal. Now, another look at volatility. So you can see Tesla is near its low on volatility, but empirically, this is a 68%. So Apple was near the low at 28. What was the next one? AMD at like 42, and now you have Tesla at 68. They're all near their lows, but the higher the empirical implied volatility is, even if it's at the low, if Tesla's at 65 and I was like, that's the lowest it's ever been, that doesn't mean the options are cheap. It means they're cheap relative to what they are, but they're always expensive, right? So it's kind of like, is there such a thing as a cheap Louis Vuitton bag? Well, the cheapest one is still way more expensive than I'm willing to pay. How about that? Okay. Lululemon. Bill wants to see Lulu. Oh, geez. Well, holy cow. Expecting 425, they got 440. That's a hell of a gap, 15%. I'm a little late. I'm a little late, I feel like, so I'll watch it. We haven't really paid much attention to Lululemon for quite some time. Where were we? Natural gas. Here. It showed this pop back in February, and then it consolidated and it only dropped down to 8 instead of down to 7. And then it turned, and you can see this turned, and I'm like, all right, let's give it a shot. We talked about it, I think, here. We didn't see it where we built a trade on it together. I don't know if anyone else took it, but I did, and then it just sort of floundered, and then I'm like, yeah, it's not going. It wasn't bad. It was a loss, but nothing terrible. I didn't write it down to 6, that's for sure. That's faux show. Visa, it's everywhere you want to be except tradable. I want it to be tradable. It's not there. The VIX. Oh, look at the VIX. See, the VIX shows us the way. Are we going to get all the way back down to this 18.5 recent low? We're very close. I think we might. But it could come down here and then pop up to 20 and then roll over, and really, I'd love to see us get below 17. Oh, we could see this VIX get back to 12. The beautiful trades that we could build in addition to our directional trades utilizing calendar spreads. Magnificent. It would be amazing. Would I consider a quick Lulu put, Ted asked. So that's an interesting one, right? If you were to do that, you have to look at the intraday, right? Hourly, 2-hour. You won't get a good signal for that on the daily chart. Because remember, my rule says I don't buy weakness and I don't sell strength. What it did today was strong. Now, if you go to the hourly chart, you could see where it drops, goes up, and makes a lower high, and that's weakness from that perspective. So yes, I would consider it, but it has to be on a different perspective than we're using by default here. So if you do that, make sure you zoom down, look at hourly, and then go from there. XLF. Nope. XLI. Maybe if it gets a little higher, maybe industrials wants to play well with others. XLP, the staples are showing a little bit of strength, and I don't love that. That's a little bit defensive. We'll keep an eye on it to see if that continues to develop. And discretionary is not. Interesting to note, Costco is considered. I think it's quasi. I think it goes both ways for what? What am I trying to say? For consumer discretionary and consumer staples, it kind of floats back and forth with what it carries, but it is technically considered to be in the non-discretionary, the staples. And so if XLP is going to show some movement, what can we do? We can trade Costco. Okay, that's the list. That's what we have going on. Ted says, I mean, we could anticipate a retracement. So I don't want to anticipate. Well, I mean, always, no matter what trade we take, we're anticipating something. Of course, we're anticipating up or down. I want to see that the retracement's begun. That's what I mean when I say I go. Now, if I wait for that on the daily chart, it could take days and days. If I'm going to catch something where it significantly drops on a pullback, I need to see it somewhere. An hourly chart. That's a perspective it's not quite a day trader's perspective, but it's enough where I'm like, okay, now that retracement's begun. So I would just say change your perspective on your chart and see where it puts you. Yes, Fred. Fred missed UNG. Let's go back. Yeah, I mean, it just keeps grinding down, right? Where is it now? So this was what I was looking at prior. It was on here, on here, on here. Bing, there's the breakout. There's the pullback. There is the higher low. Did I trade it? Yes. Did it work? No. Now what? Now it's retracing. What do I need to see? I need to see it pop. I need to see it come down. Pop, drop, higher, low. Let's go. Pop, drop, higher, low. Let's go. That's the title of my book. I'm trademarking it here today. Pop, drop, higher, low. Let's go. That's all we need. Okay. I think that what we're seeing shows us that any bullish trades we put on are viable, that we put on and are held through the last couple of days of shakeout. And there is a good chance that when we come back this afternoon, we will have some confirmation on a couple of trades. Now, how much confirmation? You may only have price with a nice predictive model, but no stochastics. I prefer, if possible, to see all three, but I may not wait. I may say, you know what? And this is where I would say anticipatory might be the right thing. Maybe we jump in that. So, okay. Whew. It's good to see everybody. Join me, please, this afternoon. We will have coffee. We will talk about life, liberty, and the pursuit of happiness, and also probably talk a little bit about trading. Please join us. If you can't make it, I'll see you tomorrow morning. We'll have morning coffee again. I don't know which is better, morning coffee or afternoon coffee. We'll take a vote on it at some point. But if either way, enjoy your day, and we will see you soon. Thank you as always, and of course, happy trading.